Hello everybody and welcome to this video where we will be running over some of the big fast food chains in the US and globally. We have today selected McDonald's, which is obviously the big boy, focusing primarily on burgers. We have Jack in the Box, it's also in the burger segment. We have Chipotle Mexican Grill, which, as the name suggests, focus on Mexican food. We have Domino's Pizza, and we have Papa John's International, which is also focusing primarily on pizzas. If we look at the stock performance year to date, we will see overall that all companies have been doing extremely well compared to the Rona situation. So gains year to date is 10.8% for McDonald's, 6.2% for Jack in the Box. For Chipotle is 55%, 34.55% for Dominos, and 45% for Papa John's. So across the board, really well. If we look at the income statement, we obviously want to understand, are these companies earning money? And if we look at the net income for the last 12 months, we can see that all of them has been earning money, which is a really good sign. Go to the gross operating net profit margin, there's no doubt that overall McDonald's is outcompeting the other competitors and they have 24.03% on the net profit. So really good, but also worthwhile to mention Domino's Pizzas on 12.15%, which compared to its industry is quite good. If we look at the Beanish M score, we just want to understand, is there happening any funny business with the accounting? And we want this to be less than minus 2.22. And we can see all of them are in the red here, except Papa John's International. But in general, except Chipotle, it's actually quite okay. I'm not too concerned about that. The Sloan Ratio, again, we want to look, is that doing any funny business with the accruals? We want that to be between minus 10 to 10%, and all of them are green here, so that is a really good sign. If we go to the return metrics, the earnings yield, again, we are comparing that to the S&P 500 average. McDonald's has 2.88, Jack in the Box 3.73, which is the best among the group. Chipotle only has 0.69%, DPC has 2.85, and Papa's has 0.40, which is really not good. If we then go to the return on equity, return on invested capital, return on assets, which is really important for these type of companies, we want to understand how well they are managing their assets. We will see that McDonald's has 9.55%, which is quite good. However, the big one is worthwhile to note is Domino's, which has 28.83%. Really, really good number. The same goes on the cash return on invested capital. McDonald's, Jack in the Box, and Chipotle and Papa John's are doing fairly well. However, none of them can beat Domino's Pizza, which has 42.52%. So they're getting really good cash return on the money that they put into the business. And that is a really, really promising number. Free cash flow yield, again, across the board, it's a little bit of mixed here. It's worthwhile to note that Jack in the Box have 6.47%, which is quite good. The rest is a little bit, but again, all of them are at least positive. So they are generating free cash flow, which is again extremely important. Next, we want to look at the balance sheet and ratios to try to understand the financial strength of the company and whether these companies will be able to weather any storms that could lure in the horizon, for example, related to the coronavirus and closure of their stores. So if we look at the current ratio and the cash ratio, we will be able to see that both Chipotle and Domino's Pizza are by far the best of all the companies. If we go to the total assets versus total liabilities, the total ratio, in general, I would like this to be above 1.5. So when I see this for McDonald's, Jack in the Box, Domino's Pizza, and Papa John's, it is really a warning flag to me. And this is also closely connected to the debt equity, which will be mirrored in this. However, what is worthwhile to note with some of these companies like McDonald's, they have prioritized to buy back shares versus paying down their debt. And this is hugely impacting the numbers. So McDonald's is an extremely well-run company. They are earning money and they could pay down their liabilities or their debt. However, due to the very, very good business environment around interest rates, they are instead preferring to keep the debt and instead pay out value to the shareholders directly. This is again reflected both in the Altman Z score and the Piotrowski score, which shows the likelihood of bankruptcy and the financial strength of the companies. And again, here Chipotle, but all the others are doing fairly well. I'm a bit surprised on the 4 on the Piotrowski score for Chipotle, but the Piotrowski score only measures for a 12-month period, and this could be the reason for the 4, because otherwise I would actually expect Chipotle to have a better score than some of the others. Next, we go to shareholder yield, and we want to understand how much value are these companies returning to their investors through either dividends or buyback. Again, McDonald's very stable here with 2.23% for the dividend and 2.18% for the buyback. Jack in the Box, really well on the buyback, 14.6%. CMG almost paying nothing out, so they're not really prioritizing this. Dominos paying generously, 7.87%. And Papa's John Pizza have preferred to issue more shares, so that's why this one is negative. So again, the total shareholder yield for especially Jack in the Box and Domino's Pizzas looks very, very interesting. However, it is very important to understand, is this a sustainable payout to the shareholders? So therefore, we want to take a look at the modified payout ratio. And here we can see that both Jack in the Box and Domino's Pizza are way above 100%. So it basically means that the free cash flow cannot pay off the dividend and the buyback to the shareholders. So therefore, these numbers that does not appear to be sustainable in the long run, and I would therefore not buy these companies under this assumption. Earnings per share and growth tends to look a bit about what is the prospects for the future. McDonald's, Jack in the Box, Domino's Pizzas quite well, whereas Chipotle and Papa's John are extremely high. This would be a bit of a concern to me to have to pay so much money for the future value of the company. The earnings per share growth forecast for the next 5 years, McDonald's seems to have reached a plateau and will only grow with 3.88%, while as Chipotle and Domino's will have very good growth compared to the industry on 22.2% and 15.3% for Domino's. This is also somehow reflected in the revenue growth for the past 5 years, again, where McDonald's have not been doing that well with -6%, while as companies like Jack in the Box, CMG, and Domino's Pizza has actually growth quite well. So again, from a growth perspective, it seems like that these companies will be a better purchase than McDonald's. Next, we want to look at whether these companies are potentially over or undervalued, as that will give us an indication as to whether we should initiate any position. One way to look at this is the PEG ratio. And obviously, if the company score here is below 1, they will be considered undervalued. And if they score above 1, they are considered overvalued. So going across the board, McDonald's, Jack in the Box, Chipotle, Domino's Pizza, and Papa's John are all considered overvalued at this moment. However, Domino's Pizza is the one that is getting closest to 1. So considered the least overvalued according to this metric. If we then take a look at the estimated intrinsic value, which is my estimated real value of the shares as of today, which is based on several different assumptions and factors, we can see that McDonald's is today overvalued with 10.5%, Jack in the Box 7.3%, Chipotle has a small upside of 1%, Domino's above with 6.5%, and Papa's John with 3.6%. So again, none of these companies really appear to have an extremely attractive entrance as of today. The same goes if we look at the book value per share. All companies appear to be overvalued as of today. The relative strength index for 14 days, we want that to be below 30, then it's considered oversold. At above 70, it's overbought and therefore not attractive. We can see McDonald's is hovering around the 70 mark, whereas the others are more or less comfortably in the middle, but none of them are showing any real bullish sign. Lastly, we can look at the analyst recommendation. And again, I am not using this to drive any investment decision, but somehow I always feel when it's good when I'm on the same side or more or less on the same side as the analyst. And we can see everybody except Jack in the Box has a buy rating. However, again, all the medium target price for these analysts suggest that there's only limited down and upside for most of these shares. And again, therefore appears that buying into these companies as of today is not as attractive as it could be. So would I, as of today, enter any position with these companies? Probably not. However, I would admit that a lot of them actually looks quite interesting. My top pick among the 5 will definitely be Domino's Pizza. They seem to be in a pretty good situation financially. Growth looks really good and the net profit is really good, which suggests that they are running their company really well. If we take a bit more of the long-term horizon for their numbers, we can also look a bit further back and we can actually see that on several parameters they have improved their growth or over the last 4 to 5 years. So this company looks like it's on a really good trajectory. However, for a safe dividend, McDonald's is obviously a good purchase. I feel that is relatively safe. I wouldn't be concerned anyway. However, it doesn't look like there's much more upside to McDonald's besides that. The last outside that I have is probably Jack in the Box, where I will go a bit against the financial recommendation from the analyst. So I would not enter any position in them right now, but again, they are doing fairly well. The revenue growth looks pretty good for this company. So I believe that there's more room for improvement for Jack in the Box. However, again, as of today, I wouldn't enter any position, but I would definitely look for any dip in the market in these companies, and then I may enter into a position on them. Please remember to do your own due diligence further. This is only a brief snapshot overview of these companies, so do your own due diligence. I am not a financial advisor and I'm only doing this for entertainment purposes. So again, I can only urge you to do your own homework, because again, it is not for free to do stock trading, and you need to understand that it can have consequences if you don't do it properly. Otherwise, please subscribe to my videos for more content in the future. And otherwise, I wish you everybody a very good day. Take care until then. Bye.